What is happening in the crypto world right now? The markets are absolutely electric, and if you're not plugged in, you're missing out on some serious moves. We've got game-changing strategies, massive corporate plays, and major shifts that could redefine the entire landscape. Get ready for the fastest rundown of the news that matters, because today, we're diving deep into the stories that are making waves and setting the pace for what's next. You do not want to miss this. Let's get into it. First up, we're breaking down a high-stakes gamble by a major player looking to secure massive institutional crypto exposure. This isn't just about buying assets. It's a strategic masterclass with potentially huge payoffs. We'll unpack the risks, the rewards, and what this means for the broader market. Then, we pivot to a tale of two cryptocurrencies facing significant headwinds, while a new contender emerges with a revolutionary vision. We'll explore the turbulence hitting established names and the disruptive force that's capturing everyone's attention. It's a story of survival, resistance, and the dawn of a new era. Next, we're talking about a critical price point for a digital asset that could dictate its immediate future. This is a pivotal moment, a make-or-break scenario that has traders and analysts on the edge of their seats, watching every tick. What happens next could set a new trend. And finally, get ready for an ambitious plan from a European firm aiming to accumulate a staggering amount of a major digital asset. Their target is immense, and their strategy could reshape corporate holdings. We're talking about a massive allocation that could have ripple effects across the entire industry. Stick around, you won't want to miss a single second. Don't forget to smash that like button, subscribe for all the latest updates, and ring that notification bell so you never miss a beat. A bold bet for big exposure. This is a high-stakes gamble that could redefine institutional involvement in the digital asset space. We're talking about a strategic play designed to secure significant exposure, a move that carries both immense potential rewards and considerable risks. It's a calculated risk, a deep dive into the volatile yet potentially lucrative world of digital currencies, executed with a level of strategic foresight that demands attention. The core of this initiative revolves around a sophisticated approach to acquiring a substantial digital asset portfolio, aiming to position a major entity at the forefront of institutional crypto adoption. This isn't merely about investment. It's about carving out a dominant presence in a rapidly evolving market, leveraging sophisticated financial instruments and market analysis to achieve ambitious goals. The architects of this strategy are not shying away from the inherent volatility, instead embracing it as part of a larger, long-term vision. They understand that to achieve significant gains, one must often be willing to take calculated risks, positioning themselves to capitalize on market movements that others might shy away from. This approach is characterized by a deep understanding of market dynamics, an intricate knowledge of the underlying technology, and a robust risk management framework. The ultimate objective is to create a powerful, institutionally backed position in the digital asset ecosystem, one that can weather market fluctuations and capitalize on long-term growth trends. The sheer scale of this undertaking suggests a belief in the enduring value and future potential of digital assets, signaling a serious commitment from traditional financial players to integrate these assets into their core strategies. It represents a significant shift in how institutions are viewing and interacting with the crypto space, moving beyond speculative interest to strategic integration. The success of this play could pave the way for similar initiatives, further accelerating the mainstream adoption of digital assets by institutional investors worldwide. The intricacies of the strategy involve careful selection of assets, precise timing of acquisitions, and ongoing portfolio management designed to optimize returns while mitigating downside risk. It's a complex financial maneuver that underscores the increasing maturity and sophistication of the digital asset market, attracting capital and expertise from established financial circles. The implications are far-reaching, potentially influencing market liquidity, price discovery, and the overall regulatory landscape for digital assets. This move is a clear indicator that the institutionalization of crypto is not just a trend, but a fundamental transformation of the financial industry. Now, how does this bold move compare to the current struggles of some established players? We'll dive into that next, alongside a disruptive new force shaking things up. Navigating the crypto currents, turbulence and transformation. The cryptocurrency landscape is a dynamic arena, currently characterized by significant volatility and shifting investor sentiment, creating a palpable tension. Two prominent digital assets, Bitcoin Cash and Solana, are finding themselves navigating particularly choppy waters. Bitcoin Cash, after experiencing a remarkable surge of 125% since April, now stands at a critical juncture. Market fatigue is setting in, and analysts are keenly observing key Fibonacci retracement levels. A breach below its current support could trigger a significant sell-off, potentially erasing recent gains and casting a shadow of doubt over its short-term prospects. This instability is fueling anxieties among investors, with the specter of a sharp downturn looming large. The market is watching closely to see if Bitcoin Cash can maintain its upward momentum or if it will succumb to bearish pressures. This situation highlights the inherent risks associated with highly volatile assets and the importance of monitoring technical indicators for potential trend reversals. The recent performance of Bitcoin Cash serves as a stark reminder that past gains are not indicative of future results, especially in the fast-paced crypto market. Investors are grappling with the uncertainty, weighing the potential for further upside against the increasing probability of a correction. The sentiment surrounding Bitcoin Cash is mixed, with some believing it has the resilience to overcome these challenges, while others are preparing for a potential decline. The focus is shifting towards on-chain data and market sentiment analysis to gauge the true strength of its support levels. Meanwhile, Solana is demonstrating a degree of resilience, hovering around the $184 mark despite a recent minor dip. Positioned within an ascending channel, Solana faces a significant resistance barrier at the $200 level. Institutional interest has injected a considerable bullish momentum into the asset, but the pressure is mounting as traders anticipate a decisive move. A successful breach of the $200 resistance could unlock substantial upside potential, igniting further gains. However, failure to overcome this critical level may lead to a period of consolidation, where the price trades sideways as market participants reassess the trend. Solana's current position is a testament to its underlying technological strengths and the growing adoption of its ecosystem, but it also underscores the challenges of breaking through established resistance points in a competitive market. The market is keenly aware of the psychological impact of the $200 mark for Solana, and a decisive move above it could signal a new phase of growth. Conversely, a rejection at this level could lead to increased selling pressure and a test of lower support levels. The broader market sentiment towards Solana remains cautiously optimistic, with many anticipating a breakout, but the immediate focus is on overcoming this key resistance. Amidst this backdrop of uncertainty, a new contender, BlockDAG, is emerging as a transformative force, capturing significant attention. Having amassed an impressive $386 million in its presale, BlockDAG is rapidly establishing a formidable presence, bolstered by a unique community engagement strategy that includes gamified experiences. The recent launch of Dashboard v4 has significantly enhanced user interaction, offering real-time tracking and market simulations, thereby fostering greater transparency and trust. Analysts are highlighting the current entry point of 3 cents for BlockDAG as a compelling investment opportunity, with projections suggesting potential price increases between $1 and $10, contingent on continued development and community growth. This success narrative is built on genuine product development and community building, setting it apart from purely speculative ventures. BlockDAG's strategy extends beyond presales. It is actively cultivating a vibrant ecosystem through educational initiatives and sports sponsorships, creating meaningful connections with diverse audiences. This avant-garde approach, coupled with live demonstrations and instructional programs, aims to build an informed and empowered user base deeply interested in the mechanics of blockchain technology. BlockDAG's trajectory signals a potential shift in the market, where innovation, community engagement, and transparent development are becoming key differentiators. While these established and emerging players navigate their paths, Another significant development is unfolding that could mark a critical turning point for a major digital asset. We'll break down that pivotal moment next. Bitcoin's crucial juncture, a $114 K test for the bulls. Bitcoin is standing at a critical precipice this week, with its price action poised to determine the immediate trajectory for the digital asset and potentially the broader cryptocurrency market. The digital gold is currently facing a make-or-break scenario around the significant $114,000 threshold. This level is not just a number. It represents a pivotal point where the bulls are fighting to maintain control and push higher, or where bears might seize the opportunity to assert dominance and initiate a downturn. The market is abuzz with anticipation as traders and analysts scrutinize every indicator, looking for signs of strength or weakness. A sustained move above $114,000 could signal a continuation of the bullish trend, potentially paving the way for new all-time highs and reinforcing confidence in Bitcoin's long-term value proposition. This would be a significant victory for the bulls, validating their conviction and attracting further institutional and retail investment. It would suggest that the market has absorbed previous volatility and is ready to embark on another upward leg. The psychological impact of breaking through such a key resistance level cannot be overstated, often leading to a cascade of buy orders as momentum builds. Conversely, a failure to hold or break above $114,000 could lead to a sharp correction. If Bitcoin falters at this level, it could indicate that the buying pressure is waning and sellers are becoming more aggressive. Such a scenario might see Bitcoin retrace its steps, testing lower support levels, potentially the $100,000 to $105,000 range, or even lower if momentum shifts decisively. This would dampen market sentiment and could trigger a broader market sell-off as investors de-risk their portfolios. The outcome of this week's trading action is therefore crucial for setting the tone for the coming weeks and months. The confluence of technical indicators, market sentiment, and macroeconomic factors will all play a role in determining which way Bitcoin breaks. Analysts are pointing to the increasing amount of Bitcoin held by corporations and institutions as a supportive factor, suggesting that there is strong underlying demand. However, the potential for regulatory shifts, global economic uncertainties, and profit-taking by early investors remain key considerations that could influence price action. The current market dynamics are a complex interplay of these forces. While the long-term outlook for Bitcoin remains overwhelmingly positive for many, the short-term fluctuations are what capture the immediate attention of the trading community. The ability of Bitcoin to maintain its value and continue its upward trend is a significant indicator of its growing maturity as an asset class. This week's test at $114,000 is a crucial checkpoint in that ongoing narrative. It's a moment where the market will collectively decide whether the bull run has the sustained power to push through significant resistance, or if a period of consolidation or correction is imminent. The implications extend beyond just Bitcoin's price. A strong showing could bolster confidence in the entire crypto ecosystem, while a significant downturn might lead to increased caution and reduced risk appetite across the board. The community is watching with bated breath, understanding that the outcome of this pivotal moment could set the stage for the next major chapter in Bitcoin's remarkable journey. Now that we've examined this critical price point, let's shift our focus to a concrete, large-scale strategic acquisition plan being executed by a European firm. We'll explore their ambitious target and how they plan to achieve it next. Amdax's ambitious $23M Bitcoin Treasury strategy, 1% of all Bitcoin. A Dutch cryptocurrency firm, Amdax, has embarked on an audacious plan to accumulate a staggering 210,000 Bitcoin, representing a full 1% of the total supply that will ever exist. This ambitious objective is being fueled by a recent $23.3 million funding round, with the company launching a dedicated division, Amsterdam Bitcoin Treasury Strategy, AMBTS, to spearhead this monumental acquisition. AMBTS is not just aiming to be a significant holder. It plans to list on Amsterdam's Euronext stock exchange, making it a publicly accessible vehicle for investors to gain exposure to a massive Bitcoin treasury. This move signifies a major step in European corporate adoption of Bitcoin, often seen as lagging behind their American counterparts who have led the charge in Treasury holdings. Companies like MicroStrategy have set a precedent, and Amdax is now aiming to carve out a substantial niche in this growing trend. The initial funding round saw commitments of €20 million, $23.3 million, providing the capital to commence Bitcoin purchases immediately, with plans for further fundraising through public markets. CEO Lukas Wenzing highlighted the strategic timing, noting Bitcoin's status as the best-performing major asset over the past decade and its increasing integration into institutional portfolios. With over 10% of Bitcoin supply already held by corporations, governments, and institutions, Wenzing believes the current environment is ripe for such a significant corporate treasury strategy. This initiative positions Amdax as a potential leader in the European crypto treasury space, aiming to rival or even surpass the holdings of many existing corporate Bitcoin holders. For context, while Germany's Bitcoin Group holds 3,605 Bitcoin and the UK's Smarter Web company holds 2,395, Amdax's 1% target is a magnitude beyond these figures. Amdax's strategic advantage is bolstered by a strong regulatory foundation. The company was the first crypto service provider registered with the Dutch Central Bank in 2020 and secured one of the first MiCA licenses from Dutch financial authorities in June 2025. This license grants Amdax operational authority across all 27 European Union countries, providing a clear and regulated pathway for institutional involvement in crypto assets. The MiCA framework is crucial for creating a uniform regulatory environment in Europe, which enhances investor confidence and facilitates easier access to digital assets through compliant channels. Amdax's move aligns with a broader trend of corporate Bitcoin treasury adoption, with total corporate holdings reaching 3.68 million tokens across 310 companies. This trend is driven by a perception of Bitcoin as a hedge against inflation and currency devaluation, with its fixed supply of 21 million coins seen as a safeguard against monetary expansion. Despite the potential for significant long-term gains, treasury strategies involving Bitcoin are not without risk. The inherent volatility of Bitcoin means prices can fluctuate dramatically, posing challenges for companies that might need to manage debt financing for these acquisitions. Critics sometimes label these as negative carry trades if borrowing costs exceed any yield or appreciation. However, proponents point to Bitcoin's historical outperformance against traditional assets, even with short-term volatility. AMBTS's plan to use traditional capital markets for fundraising, including a public listing on Euronext Amsterdam, offers a familiar investment avenue for traditional investors who wish to gain exposure to Bitcoin through a regulated corporate entity, similar to investing in gold through mining stocks. This approach democratizes access to Bitcoin treasury strategies, making it easier for a wider range of investors to participate in this growing trend. This massive strategic accumulation by Amdax is certainly a bold move in the institutional adoption narrative. We'll wrap up today's news with a quick recap and a look at what's next, so stick around. And that's a wrap on today's essential crypto updates. We saw a high-stakes institutional play for massive crypto exposure, turbulent times for Bitcoin Cash and Solana countered by the rise of BlockDAG, Bitcoin facing a critical $114K make-or-break level, and Amdax launching an ambitious plan to hoard 1% of all Bitcoin. It's been a whirlwind of activity, so make sure you're subscribed, hit that notification bell, drop a like if you found this valuable, and tell us your thoughts in the comments below. Don't forget to follow us on all social platforms for more real-time updates. We'll see you in the next one.